All right, what is going on, everyone? Welcome back to another episode of The Deep End. This is big number 41. And Ari is tuning in today from Los Angeles, coming off the heels of the last event in the Blossom Investor Tour. Ari, first and foremost, how are you? And second of all, how was last night's event? Tell us a little bit about it.
Yeah, so I kind of find it awesome that you introduce me each time and I'm either in a different city or I like just got back from a different city or I'm going to a different city, and it's like you're telling the world where I'm at, and it's always funny to then chime in after the fact and like the weather almost like a weatherman. It's like kick it over to Ari for the report.
Yeah,
Um
kind of, sort of. I mean, you've had a. Sorry to cut you off. You've had a very busy, I would say, very busy couple of months just as far as travel goes, and it's kind of fun. It's cool
yeah,
that I mean, what a time that we live in where we can do this from anywhere in the world and
like this.
different time. Yeah, exactly.
Yeah.
So I think we're really fortunate to be able to do that, and I'm glad. Not that we wouldn't, but I'm glad that we can still make it work with everything going on. Just things on your end, things on my end. So it's cool. It's cool that we have this.
Yeah, oh yeah, man. And then, as Ryan said, reporting live, not to make it sound too newsy, but reporting live or
Dun, dun,
tuning
dun,
in
dun,
live,
dun,
whatever
dun,
you want
dun,
to
dun,
call it.
dun. Action
From
news.
from, yeah, the Deep End Action News brought to you by. But I'm here in LA, and I've this is now my third time in LA in the past 3 months. So I've definitely been coming in and out of the city, and the Blossom tour has officially ended, which is super bittersweet. I'm actually right now, as I share this very podcast and tune in here with everyone in the Blossom Creator House that all the speakers are crashing in, and so yeah, it's my Blossom room here. So it's been an amazing trip. I feel like I've had the opportunity now over the past couple of weeks to chime in and share each spot or stop of the Blossom tour with everybody, which has been epic. And like I said, Ryan, it's bittersweet, man. Like last night was my last night taking the stage
Mhm.
with Blossom creators and the Blossom team, and I'm like, well, what now? Like what am I gonna do now? I was for the last like month or so, I've been planning all my travels and schedule around Blossom. Like where's the Blossom tour gonna go so I can plan accordingly and which city and what I want to do. And so now I'm like, oh, it's over. I guess I'll go to Cabo. So Ryan and I were speaking a bit before, and I think I will end up going to Cabo, which is super exciting. To speak more about the Blossom event in and of itself, last night was, as they all are. First of all, I met a couple of fans out there, so I want to say thank you for coming out. Thank you for supporting Ryan and myself. And it was just fire, man. I mean, it was a nice rooftop in LA,
Mhm.
um, and just a beautiful sunset evening talking about finance and investing in stocks. I mean, what really could be better for a guy like me and all those who were on the roof, and not only meeting, fans of ours, Ryan, but um, just hungry, young, and even older investors who are like ready to just double down on this journey. And that to be in that environment is amazing. So let me say, as I've been sharing every time I talk about these conferences and this tour, if you haven't been to a event like a Blossom social event, well, find meetups in your area and definitely join us next year on the Blossom tour, because if you even catch the slightest bit of energy, you won't want to stop coming around. It is contagious. It is just something I feel every investor is yearning for and desiring. And like I said, like it's left me, it's bittersweet. It's left me a little sad that I'm just gonna, not that going to Cabo is sad, right? But like
Mhm.
but it's like, wow, like I want to be in this community all the time, and in this energy all the time.
Yeah, I'm sure that you're kind of at this might not be the right phrasing, but I'm sure there's a pretty constant high just being around all these other investors, not only the creators, but the people in the community who consume our content, and being able to put, just meet some of these people. I'm sure that there's a pretty cool energy that comes from that. And we were kind of talking earlier today too. I think this is like our second or third time talking today. Uh, we were talking earlier on my way home from Trader Joe's on the phone, and we were kind of talking about how this type of stuff, like these in-person events, are kind of feels like it's the next frontier in this entire space. Seems like the finance space has grown and evolved and kind of started to mature to the point where there is a pretty deep sense of community online, whether it's in the YouTube comments or in a Discord group or on Blossom or on other sites and whatever. And I feel like the next step in this evolution is in-person events. And I know that like over the last couple of years, I've thrown around the idea, certainly internally, a little bit out there to you guys online, thrown around the idea of doing like in-person happy hours, dividend happy hours, and I just have not been good about it. And it is something that I'd like to do moving forward. I mean, at the very least, I'd love to start going to some more of these in-person events when they do happen. Next year will be the year for that, but it seems like such a fun and important thing to partake in, and I'm sure for a lot of people attending, and let us know in the comments too if this is you, if you were an attendee and left feeling this way. I'm sure it reignites a fire under every investor's butt who goes to these events, and that's needed every once in a while.
Yeah, I've heard from various creators as well as, attendees that like they didn't want the night to end. They
Yeah.
also didn't want the tour to end. And that to me speaks volumes, just to our point that we were making earlier on the phone. This is, I think, for sure the way of the future, where investors these days are seeking a community to invest alongside with others, and not necessarily to copycat, investments, but just to run ideas by and talk. Because we think about it, there's so few people in our lives who on the day to day they're interested in and gun ho about finance and stocks and investing. And it's kind of like when you're traveling the world and you hear someone who speaks your language, you just naturally feel like you can go up to them and you have that bond and connection. That's what I feel like about finance and investing, because again, we always talk about like throwing around the B word, budget, and only a finance guy or gal will understand that that's not a bad word, and they'll want to talk about it. And only a finance guy or gal will be open to and receptive enough to share their net worth and just kind of have this open conversation around finance and life and investing. And that's so unique. And I feel like in order to really be successful on this journey, it does take a village. I think every journey takes a village, and this one in particular is unique because we actually have to go out there and seek that village.
Yeah, absolutely. And it's getting easier and easier to find. Thank goodness for events like these, and hopefully more of them do pop up. But and I guess that's at the end of the day, that's why it is, everyone kind of leaves those events not wanting the night to end, because it feels so good to finally be around people who get it. Most people just don't get the interest in finance or investing or building wealth. It's so stuffy and it's so kind of lame to so many people. I do think that's changing. But still, for so many people, this is just not something they're interested in. So it's very refreshing to finally come across people who get it, because it just feels like, just kind of like you said, it feels like you're alone. You're the only one who gets it, which is weird. And I'm sorry if this turns into a tangent. It's weird because I remember, I remember before I got into investing, feeling that way. Like my dad would talk to me about it, and growing up, that he would tell me and my siblings, "You'll get it someday. You'll be glad that we started setting aside money for you," or whatever. And we thought it was so lame, right? And it didn't start clicking until I was like 25, 26, which is when I started getting serious about it. But then when you finally get it, when it finally does click, whew, it's just a huge 180. It's like that's the first day of your life. It's like when you finally get it, it's like, man, what was I missing out on for so many years?
And almost you come to think about like how easy it actually is, and it's
Yeah.
not so daunting. And
Yeah.
that's a part of the conversations, some of which I was having last night, which is just like, oh, once you get this thing, it's so simple. It doesn't have to be complicated. I think what's more complicated than anything is the mindset and just the ability to remain consistent. A big part of what I spoke about while on the stage there was
Mm.
playing like a billionaire, as I always do, and a lot of people like that.
That's the
But
good B word.
yeah, the good one. Um, it's just the reality, like people who obtain wealth have a different mindset, and people who invest and see a lot of success, they certainly don't invest like the average Joe or Jane. They usually have very simple approaches, nothing too complex. When they invest, they go big, and they see these successes and these wins in the market. And I had, so this is actually, I guess we can spin into this direction. He was 22 years old. I get this, Ryan, with a portfolio value, I believe it was around $355,000 at 22 years old. And he's a
This was at the
fellow
event.
at the event. He came up to
Wow.
me and he goes, "Man, I just wanted to talk to you and shake your hand." And he was like, "I had a couple of questions, some of which about career, some of which about mindset, and one of which about my portfolio." So I'll spin into the portfolio direction here. But he showed me his portfolio, and he must have had like 20 to 30 positions, I'll safely say, in that range. And he said, "What do you think about my portfolio on an objective level?" And man, first of all, I said, "Let me stop you. Let's stop right here." And I said, "Let me first just say, congratulations. You have a heck of a portfolio at 22 years old. So you already did very well. And more than that, I said, I just want to ask you a question before we go any deeper. Are you celebrating your wins?" And he gave me the kind of the same look that I used to give people, which is like, "What do you mean?" And I was like, went into this whole tangent as I normally do about living life and making sure that you are also enjoying this journey because life eventually ends. And then I spun back into his portfolio. And the piece of advice, I don't know if I want to say advice, the suggestion I shared with him was, can you take your 2 to 3 or 5 most, I want to say most profitable positions, or the at least the positions at this moment in time that you have the most conviction about, and put everything in those 5 positions, and what would happen? And I told him, I'm not going to tell you which of these holdings I think is the best, or I think is a worthy investment. To each investor their own. But which of these positions, which out of these 20 to 30, would you put all your chips on like at least 5? So my suggestion was to just pick 5 and then see what happens. And that's what I did, as you know, Ron, and there's probably a lot of people listening, tuning in here, know that I trim my portfolio down. Curious to catch your thoughts on that, though. He had a lot of growth-oriented positions. For those of you who are wondering, I do recall one of the biggest positions being Robinhood in there. And, again, at 22 years old, this guy's all in on growth and these opportunities, and a portfolio to prove it at 355.
Yeah, I'm pretty torn. On one hand, I think that, 20 to 30 holdings, are these all individual companies, by the way, or do we have some ETFs in here?
I didn't see any ETFs. I was looking for
Okay.
them.
So all individual companies, I think at that portfolio size, I, you know, I think that's probably a fine number. I generally think as your portfolio gets larger, it can make sense to become more diversified, just to be a bit more protective of the money that you do have. Obviously, there can be a trade off there because the more diversified you are, the more your returns will, kind of start to match the market. And it gets to a certain point where you just kind of ask yourself, well, I might as well just invest in the market then. And so there is kind of that balance that you need to find. But I also think if there are holdings that he doesn't have well, I mean, I guess it's hard to say because if you went by like most conviction, then you might as well just put it all into the number one stock and call it good. And you can't really do that. That's not really realistic. So this is where I get kind
It's
of
like my
torn because
2026 plan, dude.
yeah, I'm sure. So that this is where I get kind of torn because that sounds like a reasonable amount of holdings for his age, or for his portfolio size, excuse me, and especially if they're more growth oriented. Like if they are the Robin Hoods, which I'm going to throw Robin Hood in kind of the for maybe this is right or wrong, I don't know, but I'm going to kind of lump it in with some of the other hyped up stocks right now, like the Nvidias and whatever. So if his portfolio was more made up of those, we could put Palantir in there, we could put Hims. If it's those kind of companies, I probably would like that diversification because I think that those types of stocks have really been driven by momentum lately, and so I think it does make sense to have those safeguards in place. But I do think if the positions were maybe a bit more predictable, like if, and I don't want to say Coca-Cola because that's the complete opposite end of the spectrum, but yeah, we could say if it's more like big blue chip companies like Coca-Cola or Microsoft, Apple, Visa, if we're talking those, excluding Coca-Cola, the others, those more type of growthy companies, Amazon, then yeah, I think you can get by with less. I think you could get by with less holdings. And I also think, I haven't seen this portfolio obviously, but if you're looking at it and there are numerous positions that are like 1.5% of the portfolio, 1% of the portfolio, 0.6, 0.8% of the portfolio. If there are some holdings in there that are that small, that are really not going to move the needle, then I do kind of question the point in holding those at all. Like if you have those really minuscule positions, you might as well just consolidate a little bit and simplify a bit more. I think that's a really easy way to do so.
Well, man, I'll tell you, first of all, he did have some of those positions that were like
Okay.
little sliders, right?
Yeah.
Those were the ones that I said to him. Again, I didn't say get rid of them. I just said you might want to think about
Yeah.
approaching this in a new way, which is if you have these high conviction stocks that you're, maybe 35, 40%, your portfolios, like, okay, like go all in, and I think at 22, first of all, you really can. This goes hand in hand with playing and investing like a billionaire. You can afford to lose some change, and I don't consider $5,000 or 10 grand, or even 15 or 20 grand that much money these days. And I'm
Not
not
when
here
you have
saying
a
I'm a millionaire.
portfolio, not when you have a portfolio of that size. Definitely not. It's all relative, right? If you had a
Yeah,
$50,000
exactly.
portfolio, it'd be a different story.
Yeah,
Yeah.
100%, 100%. So that's where I say, like, dude, you can afford, again, the companies that he's investing in, I would say, even though they're growth oriented and seeing some volatility, they are companies that are very relevant to our times today and players in their respective industries. And so I would be comfortable doubling down on some of those positions and weeding out the ones that are, 1% or half of a percent of your portfolio that, you invested into. And I did bring this a little bit into about an hour ago. I interviewed someone from Masters of the Market, and I asked her this question, but I was asking about, again, the portfolio size and why people decide to load up on 20 to 30 holdings, with some of those holdings only being like a half a percentage point or a percentage point. And her answer was FOMO. I
Yeah.
honestly, I don't know. Do you think it is FOMO?
I think that's part of it. I also think that, yeah, I do think part of it's FOMO because you see, especially on social media, you see so many people piling into certain companies and you feel like you see other people making gains on it, so you want that for yourself. So I do think there is a FOMO component to it, but also it could be a status thing. You do feel, and that kind of ties into the FOMO thing, you want to be with the in crowd. You want to be a part of the herd. And if the herd is investing in stock XYZ, you feel like you're outside of the herd if you're also not in that, especially if it's this thing that everyone is talking about. It's the hot new thing. You got to be in on the hot new thing. It's actually no different than fashion trends. For a while, and maybe they still are, it was like Crocs were everyone was wearing Crocs. Out of
Dude,
nowhere,
yeah,
people
yeah.
started
Check
wearing
this out. I
Crocs.
got one right now.
You wearing some right now?
I'm not a croc guy, but
Okay. I'm not
are
I'm
you a
not really
croc guy?
either. No, I'm not really a Croc guy. My grandmother is. Those were always her favorite gardening shoe. And that's always how I think of them. Growing up, she always wore Crocs for gardening, and I can never get that out of my head. Nothing against Crocs. That's just like my anecdotal experience with them. Um, but for a while, Crocs were the hot thing. Every kid was wearing Crocs. And also too, what's another thing that I've been seeing recently? There's some brand that I feel like I guess True Religion. Like, do you remember True Religion jeans? Those were a hot fashion trend for a while, and I actually see them kind of making a comeback. And kids are wearing them. But anyway, all of that's to say, there are these fashion trends then, and as a kid you gotta have the Crocs, you gotta have the True Religions, or else you're not cool. And I think a similar thing does exist in the stock market when it comes to stocks. So it is a FOMO thing, but it's also kind of a status thing. You know what I'm saying? So I
Were
think it's
people
those
wearing
two at
True
play.
Religion jeans and Crocs in LA together?
Oh, I don't know.
Yeah.
You'd know. I mean, you're there. You know better than I would. But I remember being in high school and even a little bit younger, and True Religions were like that was the cool jean to wear. Gosh, this is
Yeah.
gonna bug me though. There's a certain brand I've been seeing kids wearing, and I look at it and it's very expensive, and I'm like, and all these kids are wearing it. I'm like, who's got the money for this to dress their kids in this stuff? I don't remember what it was though. It'll come to me later. You guys might know in the
I
comments too.
I do remember True Religion jeans and Hollister. That was another big one for like a snippet
Oh
of
yeah,
time. I'll tell you what happened. A funny Hollister story to talk about FOMO. Everyone was buying Hollister, and I
yeah,
was never into all this stuff, but everybody had Hollister shirts. So I was like, I want a Hollister shirt.
yeah.
And I went in and I bought three shirts. I bought a red one, a white one, and like a baby bluish one. And I remember I wore my white Hollister shirt for Hollister first time, and thought it was so cool, right? In the in crowd now, and I washed I had the shirt washed, threw it in the laundry, and it shrunk.
Mm.
And that was the last time I ever bought Hollister clothes, because even at a young age, I was like, how stupid is this? Like
Yeah.
you can't like so. I don't know. I wasn't going anywhere exactly with that, just a Hollister memory. But
No, it's good, but that's a great addition. Like Abercrombie and Fitch. I mean, which
yep,
is they're the same company, but same thing. When we were growing up, A&F was really cool.
it's making
So
a comeback, is it not?
yeah, it is. It's definitely different. Hollister is actually more similar to how it was when we were kids than Abercrombie is. Abercrombie is totally different than what it used to be. It used to be super preppy, um, and it's definitely not that way anymore. It's like they've got partnerships with the NFL. What else do they have going on? I mean, there is some preppy stuff, but it's definitely way different than it used to be.
I feel like everything is changing as we go, and I'll tell you, I was walking in Chicago. I was right outside of SIBO, the Chicago Stock Exchange over there, and for the first time in my life, Ryan, walking down the sidewalk, and a robot was on the sidewalk with me,
Oh,
and it cut me off. Man, the thing cut me off,
that's
first of
rude.
all.
It's rude.
Rude. It was a delivery robot, and
Uh,
it was like kind of speeding down the way, and we met at the corner of the street. But like it like whizzed past me, I was like, whoa,
that's so
and
crazy.
I've never seen one before. But talk about things changing.
Yeah.
And I'm even in LA now, man. I've seen so far like four or five of the Waymo cars
Yeah, those are huge here in
driverless.
Vegas. Yeah.
It's more and more a thing, which is prompting me really. I mean, as 2026 is winding down, I'm asking myself these questions now of what's the portfolio going to look like, Ari? What are the moves? And I to kind of come full circle, it looks like I will be doing a little bit more trimming. I had a good conversation with a few folks yesterday about United Health. I'm not selling out of United Health yet. I do hold it, but I think the move is going to be hold it until it becomes profitable for me again and go all in here on just a few of my individual holdings, one of which is Google. I like that I see these robots, even though it cut me off. Even though it cut me off.
Yeah.
At least it was delivering something.
No, it is. It's crazy. I guess the good thing, as far as your portfolio goes, is you really don't have to make too many changes to capitalize on these new and crazy things that you see out on the street. I mean, you'll get exposure to that through the S&P 500. You'll get exposure to that through the tech ETF, obviously through Alphabet as well, which is also in both of those funds. So the good thing about your portfolio, how it's set up, is you don't really have to do too much to capitalize on these new trends and these new technologies because you've already exposed yourself to it in a broad way.
Yeah, which is exactly, it's how I wanted to set it up. But an interesting question that's been continuously asked while on stage at these Blossom events has been, how have you over time, how have you evolved as an investor from maybe defining yourself as X investor to becoming Y investor? And something I've been thinking about more recently as well, Ryan, is the fact that I don't like to go by definitions. Because I feel like I'd be putting myself in a box. I'd be doing myself a disservice. At the end of the day, I'm just an investor, and to evolve as an investor has been really, I want to say, like, the core root of my successes so far. Do you feel the same? Like, do you feel you've been evolving a lot as an investor with your strategy? I know it's remained the same relatively, but
Yeah.
the way
I,
you're
I
looking at stocks to pick which ones to invest in, because, like, for example, Clear Secure is one that you like and that you talk about. You haven't pulled the trigger on it yet,
I have. I've
but you
owned
have
Clear.
pulled it.
I've owned Clear for, I don't know if it's been a full year yet, but I've owned it for a while now.
Which
Yeah.
which stock do you talk about? There's one,
Rollins,
Rollins.
maybe.
That's what it
Yeah,
is.
yeah.
Yeah.
No,
But, like, for
yeah.
example, like, is it because of your strategy? Is it because of, like, I want to say how you're classifying yourself, because it's just dividend investor, but,
No,
like,
yeah,
you know what I'm
it's
saying?
not. Yeah, I totally do it. It's not that at all with Rollins. I'm at this point. I'm just being stubborn with it. Rollins is kind of a valuation thing. I'm dumb for not buying it sooner. But now I'm just kind of being stubborn and waiting for a lower price. I do think I'm justified in that. I do think it is still expensive. I think it's a very high quality company, but I do think it's expensive. So I'm waiting. To me, having Rollins in the portfolio is an inevitable thing, but I am waiting for a better opportunity to do it. I do think, generally speaking, the market is very frothy right now. I think it has been for a while. And I think if the market as a whole sees some sort of like meaningful pullback, I think Rollins, maybe not as much as the rest of the market, but I do think Rollins will see a pullback as well. And that will be the time to strike on it. I'm being very patient with it. But I'm in no rush. I'm only 32 years old. I've got plenty of time to buy this company. But to answer your question, yeah, I definitely. I mean, there's absolutely been an evolution in the approach. I think some things have stayed the same. Like at the root of it all, I'm still a diehard dividend investor. But I think what that means for me has changed over time. When I first started in doing this stuff, to me, a dividend investor was someone who just invested strictly for the cash flow. You're just looking at the dividend stats, and the only thing you really want to care about is that they're paying a dividend, that dividend is growing over time, and that you're getting a respectable yield from that. And the more time that I've spent in the market, the more that I've read and experienced firsthand. You got to think about more than that. I've definitely adopted a more holistic approach to looking at businesses, and I think that's really like the main difference in the evolution. Is at first I wasn't really looking necessarily super deep or thinking super deep about the business itself. It was more just about like the dividend stats and how that fit into my portfolio. But still, with that said, the thing that has stayed the same is I still only buy companies that pay a dividend, except now these days, it's kind of the only thing I really care about is like the presence of a dividend. It's not so much looking for certain dividend stats necessarily. And so really the business comes first. I'm first and foremost like looking for high quality businesses like a Rollins, even like Clear Secure. I think Clear Secure is a very high quality business. And I mean, even since I've owned it, the it's just crazy how they've started to expand their addressable market, and I'm learning that that is kind of the name of the game with them. Yeah, people see it as just being in travel, and it is very much in that. But man, there is so much that they can do, and there's so much they've started doing even in the short amount of time I've owned it. So that will continue to play out. But what I'm trying to say is I'm looking now more for businesses that I think are high quality, that I understand, that I think have competitive advantages, that I think will still, in a world that's changing faster than ever, these businesses will still have their place in that and can be resilient to that change. I actually think Clear Secure is an exception to that. But, all the other ones, Rollins is another great example. I think actually the newest addition to my portfolio, which is Watsco, I don't know if we've even talked about that yet, but I just started a position in a company called Watsco, which is the largest distributor of HVAC parts and equipment in North America. So heating, air conditioning, stuff like that. I mean, that's just one of those things that's not going to change. Businesses, homes, people are always going to want to keep their spaces at comfortable temperatures. And if your HVAC unit breaks down, you're either going to repair it pretty quickly or you're going to replace it pretty quickly. And I just don't see that really being disrupted. And I think it's a high quality business, in addition to its necessity. And so that's kind of what I'm looking for is these businesses that I understand. I can understand why they're important. I can understand where they've been, where they're going, who's running them, and they pay a dividend along with that. And all of that just creates like a certain affinity for these businesses. Like I also have to be interested in it. I'm really interested in Clear Secure. It's very intriguing to me. Really interested in Rollins. I'm really interested in Watsco and all the different businesses I own. Like there's just something about them that stands out to me. And so I think of myself as a collector because of that too. So sorry.
What makes you interested in Watsco?
Oh, well, I think a few different things. Number one, culturally, I really, really like that they are conservative in how they approach debt and how they keep and maintain their balance sheet. Like they have a real aversion to betting the farm on any one thing. So I think that creates resilience that shouldn't get them into anything crazy as time goes on. Like no matter what's going on in the world or in the economy, like if they have no debt, the business is just not going to go bankrupt. So like the staying power is there. And that's something that's become really important to me. And I guess I'm sorry if this turns into another tangent, but that's kind of another thing that I think about when it comes to these businesses is, and investing in general, like it's cool to be, it's cool to get crazy gains in one year, but I also think like way beyond just what's happening this year or next year. Like my goal with investing is like, I want to be the last man standing. I want to be in this thing for a long, long period of time. I want to do things in a way that are going to be sustainable. That's not going to, I don't want to do things that are going to cause my portfolio to blow up in search of just crazy gains, I'd rather do things more sustainably, more consistently over a long period of time. And when I look at a company like Watsco, that's undeniably like in a boring industry. It's not sexy. It's not fast changing. It's not super disruptive. They're not moving fast and breaking things. A business like that, I think fits what I'm looking for. It's going to be around for a long, long period of time. It's like a big oak tree. You know what I'm saying? It's got deep roots. It's mature, still growing. And that's the crazy thing about it. It is still growing. Double-digit earnings per share growth, high single-digit revenue growth, really, really solid and consistent free cash flow growth. So I think that's obviously like the financial profile is another thing that really attracts me to it. But even just the nature of what they do, people are always going to want to keep their spaces at a comfortable temperature. So it's just one of those things that's not going to change. And it's also, this is something I've been thinking about lately too, in terms of the industry as a whole. You can either be a big fish in a small pond. You can be a small fish in a big pond. You could be a big fish in a big pond. And the thing about the HVAC distribution industry is it's a very big pond. There are multiple thousands of distributors, businesses that do this around the country. So it's a very fragmented industry, but within that industry, Watsco is a major player. Like I said, they are the largest, and I think they maybe have like 10, 12% of the entire market, which is much greater than even their next competitor. And so I think that's interesting too. You know, they're a big fish in a big pond. They have room to continue growing that market share. One of the ways that they do so is through these acquisitions. And another thing that I appreciate about it is, excuse me, how they structure all these acquisitions and the companies they buy. You know, they don't just buy like a mom and pop distributor, which is what most of them are in this industry. It's kind of one-off distributors, mom and pop family businesses. You know, when they're buying these businesses, they totally keep it decentralized. Like everything is localized. They don't change the name of the distributor to then Watsco. Everything keeps the same name, keep the same operations. But these localized distributors that are now under the Watsco umbrella, they still get to benefit from Watsco's scale, the relationship with their suppliers, with the manufacturers of these HVAC units, whether it's Carrier or Lennox or Rheem. And that's the thing, the manufacturer, and I'm sorry, I know I'm going on a tangent, but it's kind of a lot. I'm excited about it. The manufacturers, there's only a small handful of HVAC manufacturers. And so when they make these acquisitions, the companies that they buy now get to benefit from the scale and the technology and the relationships that Watsco has. And it's also, this is the last thing I'll say about it, sorry. There's an idea of, in business, you can have like zero-sum games or non-zero-sum games. Zero-sum game is like, for me to win, you have to lose. A non-zero-sum game would be one where everyone involved wins. And I definitely think that's the case here with Watsco, and I'll try and lay that out. So Watsco is the middleman between the manufacturer and the contractor. The contractor is their customer. It's not people who own homes. It's not people who own businesses. Generally, all of their sales are through contractors. So one of the cool things that Watsco does is they spend a lot on research and development of new technologies and have developed their own kind of like, how would I explain it? It's kind of like their own sales platform for everything that all of the inventory that they have. So their contractor customers, you know, when they go to visit a site to make a repair or, you know, maybe replace the HVAC unit, instead of like having to get on the phone and call distributors and see who's got what in store, they can just hop on this platform that Watsco has, look up the inventory, pick it up like later that afternoon, and then install it right away. And so it's really helpful to their competitor, or not their competitors, it's really helpful to their contractor customers. And so what Watsco does, it helps their business because it's going to help them make the sale, but it also helps the contractors that they work with. It also helps their customers grow their business and make their business more efficient, which obviously creates a deeper relationship between them and their customer. And also they've got these joint ventures, these exclusive partnerships with the manufacturers like Carrier. I think they distribute something like 60 or 65% of all of the products that Carrier manufactures. And so it's going to be good for Carrier, who has this partnership with Watsco, who has these really deep relationships with their customers. So everyone involved wins in this ecosystem. And I just think that's a really cool thing. Sorry for the tangent. I know that was everywhere. My bad.
No, it actually wasn't everywhere, but as you were speaking, something came to mind for me, which is, well, multiple things came to mind, but I think the most pressing that I want to share for every listener or viewer out there is the fact that the way Ryan was just able to put together a sequence of like his thesis on why Watsco is a amazing company to invest into. My thoughts went to, is every investor able to do this with their individual holdings? Are you able to talk about it the way that you just spoke about Watsco? Are you able to go to a dinner party and hold a conversation like this?
Or put someone to sleep.
Yeah, I was like, but either way, no matter if it's putting someone to sleep, I'm sure, Ryan, when you're putting your daughter to sleep, you're talking about Watsco, and she's out like a light bulb, you know?
Exactly. And by the way, for the record, we do have a Carrier HVAC unit. So when I'm putting her to sleep, telling her about Watsco, we got that,
you bring in
that
the unit
purring like a kitten out there. Oh yeah.
I was gonna say it's the easiest for her to just white noise it. But it's true. I don't think a lot of people can speak that deeply about their holdings, and that's deeply concerning, at least in my opinion. To the point where even last night, I was asked a few times about United Health and my stance on United Health, and somebody had a different opinion. I was standing in a circle of about 6 individuals. Someone had a different opinion, and first of all, that's totally okay by me. He was like, well, "What do you think about that?" And I was like, "That's great. It's
Like,
your opinion."
was he trying to be like, get kind of gotcha? Was it kind of a gotcha
Not so
thing,
much
or
gotcha, but kind of
no?
like didn't want to feel like less than intelligent, I'll say, in front of a group of people.
Oh,
But
okay.
what I shared is just like, yeah, you might be right. Who knows? It's anybody's game.
Yeah.
I'm long on United Health. I'm not expecting it to be back in the high highs. Yes, tomorrow, right? Or I wasn't expecting that yesterday. So when you're invested in a company, you really do have to understand it, be able to explain it, talk about, in my case with United Health, talk about rising costs of premiums and how politics is playing a big role and headlines and, the PR crisis that's going on, or if it's a Watsco. And to your point, talking about Watsco, the other thing that I was thinking about was um, these days, I don't want to say more and more folks are thinking about not going to college. I still think college is a big role. I'm an advocate for college and education and bettering yourself in all capacities, inclusive of college and even, MBAs and whatnot. But where I'm getting at with this is a Watsco is a type of company where we need more skilled laborers in trade jobs, and Watsco is providing that just by
Yeah.
way of being not necessarily anything other than a facilitator of networks and connecting and repair and supply. These are jobs that are needed, and I think more and more we're seeing trade jobs available to us all, but nobody far less people, because we are in an economic system that promotes education and services over labor. Uh, it's almost an embarrassment if you're a laborer, or you feel less than sometimes if you're a laborer, and that's sad because it's very much needed, and you make good money from it. But that's like a Watsco situation, right? Like, who grows up and they're like, I want to be, I want to go work for Watsco. Probably no
Yeah.
one, but some of us might find ourselves there. And it's an outstanding company that's growing.
Or Rollins. Like, you could say the same thing about Rollins. And by the way, every all of those things that I just described about Watsco, you can copy and paste that directly onto Rollins, because they operate in a very similar way, and they have very similar relationships with the businesses that they acquire. It's still very decentralized in the same way that it is with Watsco. So I see very similar patterns between these two businesses, which is one of the things that I think drew me to Watsco, draws me to Watsco, and also makes me like Rollins. I hope that I can have them both. And I do want to say too, like, going back to what you were talking about, questioning whether people can talk about the businesses they own like that. Maybe or maybe not. I will say that being able to think about businesses in the way that I was kind of describing them, which, by the way, like, mostly had nothing to do with the numbers. I talked about their lack of debt, but most of the things that I was talking about were qualitative, which then trickles into the numbers. But most of it was qualitative and had to do with the relationships between the people involved. And I do think that that's become a big part of my evolution as an investor as well, as to look for these things. But that's only come with time and experience and really making an effort to be a student of the game. And I've said this before, but I think that that's like a mandatory thing, is to try just be a continuous learner. If you're going to be investing in individual companies, you need to just keep learning, keep sharpening your tool set. And that doesn't mean you need to read every single investing book under the sun, because I think a lot of these things you'll find outside of just straight investing books. Read things about human behavior, human psychology, and things adjacent to that, and I think you'll pick up on a lot of these things. And so, yeah, maybe not everyone can talk about a business in the same way that I just did, but also there are people way smarter than me that can talk about things way deeper than I can too, by the way. This is just kind of the place that I'm at in my investing journey. It's farther along than where I started. Down the road I'll be farther along than where I'm at today, and that's just the name of the game. But yeah, I would encourage everyone to, if you are going to be investing in individual companies, really just become a student, just a sponge, soak everything up, because you never know when you'll be able to pull that information and apply it to something that's going on in your portfolio, and you'll start to see these different patterns.
Well, one would hope that over time you get smarter as an investor, and that's not always the case. I was listening to someone who was in the circle of individuals I was speaking with yesterday, and he was like, "I've been 2 years and invested in Bitcoin. I still can't explain a single thing." And I get it. Bitcoin's a different animal, but again, if you're going to be invested in something, you probably want to at least be able to explain it at a dinner party or to a good friend, or as they say, you might want to be able to explain it at least at the level of a 4-year-old or a 5-year-old, whatever the age, 6-year-old can understand it, which means you just have to be able to explain it at a really simple level. Ryan, I also wanted to just say about Clear Secure. I've been doing so much traveling recently, and what's interesting about Clear Secure is it's at every airport so far that I've been to, and the lines are almost non-existent at Clear Secure. That means A, they get people through quickly, but also B, it's still on the come up. That's how I see it. Everyone, we see the Clear Secure signs. I've used it twice now because they had like a free trial thing, and I used it, and it was fabulous. It was amazing.
All right, good.
I buffed right through,
Good.
And then the reason why I haven't used it again is because I figured I wasn't going to be doing that much travel, and then all of a sudden I got hit with like 3 months worth of travel. But I would say it's worth it for the efficiency matters to get through the airport, especially if you're taking a lot of flights and run a little bit late here and there. But yeah, when I look at the Clear Secure lines, I'm like, wow, not only is no one in there, it means they get people through those lines and it's efficient, but the vast majority of people are still hanging around the traditional TSA pre-check or TSA check, which means that there's opportunity for Clear Secure to really grow.
Yeah.
And so I'm saying here, be a vigilant investor.
Yeah, and they, not to get too deep in the weeds on Clear, but like I said earlier, they are totally addressing or expanding their total addressable market. They are creating partnerships with companies outside of travel, like DocuSign, like I think they have a partnership with Public, actually. They have a partnership with LinkedIn. So they're creating all these different ways, these other ways that you can use their platform and use their service outside of just traveling. And even as it does pertain to travel, they are creating new hardware to really continue to speed up the efficiency of people getting through the gates. I mean, they had their their normal pods, which I think it scanned like your thumbprint or your eye or something like that. Then they switched to the Envy pods, which are kind of the newest piece of hardware, which is much faster. It's like your full face, scans it super quick, so that's going to shave off some time. Now they're introducing full clear lanes where you just kind of walk through and it scans you and checks your identity as you're walking through, so you don't even have to stop. And so they're really, really making some drastic improvements to their product, which is cool to see. So I think that paired with all the other things they're doing outside of travel, I think it's one of those businesses that so far continues to get better and better. It is because it is in a rapidly changing industry. It is the position in my portfolio that I think has the most risk or has the most that can go wrong because things do move so fast. And that's kind of why I'm not taking a bigger position in it or a much bigger position. But I don't know. I like the company. I think it's interesting. And I'm glad to hear you've had a good experience with it. Another thing that kind of scares me about it is I read a lot about them. I read their comments on social media. I read about them on Reddit, and it's a totally mixed bag. I guess that's going to be the case with any business, though. So
really, first of all, have you tried it? And second of all, what were some of the negative reviews?
So yeah, I've tried it. Some of the negative reviews, I don't pay for it for full disclosure. I probably should. I probably should be a good investor and become a subscriber, but
Yeah, but if you don't travel that much, it's not
that's the
worth it.
thing. That's the thing. I do not travel at all. Well, I'm going to be traveling even less now, but even before the baby, my wife and I would fly maybe twice a year, so it just didn't make sense.
Doesn't make any sense. You might as well
Yeah,
buy another share for that price.
yeah, yeah, exactly. But some of the negative reviews that I see are just people saying that it's slower than like the normal line or something. It's typically
What?
something like that, or that there was like a rude representative that they were dealing with, or something along those lines. And it just depends too. Like that's the thing. If the airport's not busy, then there's not much of a need to go through the clear lane because it could be just as fast. But it's kind of more of an insurance policy than anything. You have a subscription for the times where the airport's not busy. And if you are someone who travels regularly enough, you're bound to run into those instances where it will come in handy. So,
I run into it all the time. I was on my way back, or I was on my way to LA the other day, and I was moving so quickly. I went into TSA pre-check, and I don't have the pre-check. So the guy looked at my ID, put it through the scanner, and goes like, "Oh, you're not supposed to be in this line." And I was like, "What are you talking about? Like I have a flight to catch, man.
yeah.
But he goes, "No, you got to go through the other lane. So yeah, there's certainly instances in which I think you should be buying a clear, secure, or the alike. But if you're not traveling, I don't think it's necessary. Nonetheless, though, I see a lot of those comments, man. Because back when I used to work at Yelp, sometimes businesses get terrible reviews of people who are just like upset that day, and like
Yeah.
they want to voice these negative opinions. But I will say the representative does everything. Like there's representatives at the clear secure lines, and those representatives, if you really want to make like a positive splash in this pool, you have to make sure you have good representatives working 24/7 all of those lanes, because just one representative, while clear secure is still on the come up, can ruin it for everyone.
Yeah.
That one review. It really sometimes does come down to like those reviews when someone's making that decision. Do I want to buy clear secure? And they go to those reviews and they see, oh, bad experience. And then you read it. Most people don't even read the reviews. They look at the rating. It's like 3.5 stars out of 5. Nah, don't want it anymore, right? Some people then proceed to look at the reviews. Maybe they'll look at 2 or 3. Other people will click, show me more, and read them. But I think that's where it's important. Like, what is it? Southwest Airlines. They have like one of the best customer service, and just like airline um, staff. Likewise with like almost Amazon, right? It's just like you get these amazing customer experiences, and that's what drives business.
It is because great customer service is not an easy thing. Like it takes effort to be nice to someone and to be helpful to someone. And if a customer is on the receiving end of that, and you know that too, as someone, if you're someone who tries to be polite and do the right thing in your own life, you know that it takes effort. And so if you're on the receiving end of that by a business, you know that it takes that business effort. It would be much easier for them just to blow you off. So the fact that they don't, tells you that they care and they want you to have a good experience. They want to build trust with you. And that's really what it's all about. That's why good customer service exists. It's just one way for businesses to build trust. And so, and as an investor, like these are also things that you need to be thinking about. If you realize that, if you realize that a certain business has really good customer service or their customers seem pretty happy, and there's some trust factor involved there, that's a competitive advantage. It could be a competitive advantage of theirs. So, and that's the fun thing about, kind of zooming out a bit. Again, that's kind of the fun thing about being an investor in individual companies. I think it's thinking about all of these things and thinking about what makes these businesses tick and how they interact with their customers and their suppliers and so on and so forth. I just think it's really interesting. And you asked me at the start of this conversation, why do people invest in certain companies? Is it FOMO? Is it status? In my case, is it affinity? You just like them for whatever reasons. I don't know. What do you think? I never got to ask you that same question. why do you think people buy certain businesses?
I think people overload their portfolio based off of lack of knowledge or lack of comfort, one of the two. And I'll go with lack of knowledge first, because you really do think that, I guess this is combined. I really do believe in diversification. I believe that to my core. It's been my experience that you can make a lot more returns. It's more volatile, that's for sure. But if you're invested in high quality companies and holding on to them for the longer term, at least my returns have been stellar. And because I've doubled down on them, and diversification has changed. My definition of diversification has changed immensely. It's not about the amount of holdings, it's about the sectors. And so being invested
Yeah.
in one tech stock or two tech stocks, and then being invested in a healthcare company, I mean, that's great diversification. One is uber safe for the most part, and one is your uber growth.
Yeah.
And then, of course, with the ETFs, it just knocks out everything with reliability. But on another front, when people go about picking stocks and loading up on all of these holdings, I I maybe think, yeah, maybe there's a little bit of FOMO in there of like, oh, I just want to say that I own it. But I don't know, man. I think it comes down to like this comfort thing. You just want to make sure you don't lose. But I also think in doing that, you lose.
Because of the opportunity cost.
Yes.
You're putting money into something in option A where option B might have made you more money.
Yeah, I mean, if you try, it's so cliche and classic. If you try to catch everything, you'll catch nothing,
Yeah, yeah.
And so that's you try to do everything and you'll do nothing, right? Like your schedule's so overloaded with to-dos, you don't even want to look at the damn thing. You
Mhm.
just put the whole to-do list down and you're like, forget it, I'll do it tomorrow. This is a lot. But you have
Yeah.
one or two things on your schedule, those things will get done, even if they're harder tasks. If you have 1 to 5 investments that you're focused on to build high quality positions, you'll scale them. But it's when you're looking at a portfolio of like 50 holdings, you're like, where do I have $500 for the most part. Most people out there have like $100 to $500 a month to invest. You got 50 holdings. What are you doing? How much money are you putting into what position?
Yeah.
Versus
And,
having five, and maybe you can keep building up these positions up pretty quickly.
and there's a pretty good chance, like in that example you described, there's a pretty good chance that someone with that number of holdings, I mean, kind of what it sounds like with the investor that whose portfolio we started off talking about, there's probably a pretty good chance that that individual has at least a handful of positions that are the like 1%, 0.9%, 0.8%, these really minuscule positions in their portfolio. And yeah, to that point, I just don't like in my case, in starting a position in Watsco, I'm not thinking I'll just buy a few shares and set on it. Just to have it just to say that I have it. I'm buying into this thing thinking, no, I'm gonna freaking load it up until it gets to hopefully 5, 6, 7, 8% of the portfolio. And hopefully by that time it's starting to take off. The share price is starting to go. But I'm not trying to just make it like a 1% position. What's the point in that? And I think for investors, especially when it comes to investing in individual companies, you need to you when it comes to deploying your money, you have a decision between buying something that you already own or buying something new. And I think if you're going to buy something just with the intent to make it be like 1% or less, just don't do it. You're better off buying something that you already own. If you have a 10% position over here and a 1% position over here, assuming that you should be spending the same amount of time on both and keeping tabs on what's going on with them and listening to the earnings calls and whatever else goes into that, the maintenance of that position in your portfolio, it just, the time that you're going to spend, it doesn't make sense to have that small of a position. If you are someone who's doing it right and is keeping tabs on everything, don't I'll say it once again and I'll finish it up because I'll start rambling. It just doesn't make sense to have positions that small, I think.
But Ryan, one might argue that I'm just playing devil's advocate. I don't believe in this stance, but one
That's
might
fine.
argue that their position that they're stoked about, and it might be that 10% position, it's at all-time highs, and so you're
Mm,
better off buying a position that is at maybe an average to low price, just a better buy-in price.
yeah.
What do you do then?
I think that's great. I think that totally makes sense. That was actually the case with Watsco for me. Like I'm always comparing it to like, would I be better off buying, Visa or Williams Sonoma, or would I be better off buying like, Watsco or Rollins or whatever? And I don't know exactly. It's just gonna have to wait and see how things play out. But I'm looking at Visa thinking, man, this thing's at all-time highs right now versus Watsco, which has seen a pullback of almost 30% like in the last year. Uh, yeah, just based on the price action, I feel like I'm getting. I think it's easier for me to pull the trigger on something like a Watsco. So if we're just talking about the valuation, then yeah, I think that makes sense. I think more so what the approach that I'm coming from is more of a matter of position sizing. You know what I'm saying? Because there are people who will buy positions just to like, oh, I'm just going to buy it just to keep an eye on it. It's almost like their portfolio is also their watch list, which I guess kind of makes sense. But also like, I don't know, why buy
But I
a
don't know.
share or two
I
shares of
don't think that
something?
makes any sense. I think if you
Oh, I
want
don't
to
either.
watch a stock, then watch a stock. Don't buy it to watch it.
Yeah, I
You
agree.
know, like that's crazy. It's like, oh, you want to see if you like tennis, so you go out and you buy the newest tennis shoes, the newest tennis shirts, and the best racket ever, only to then realize that you don't actually love tennis and you put it in the garage, you never touch it again.
Yeah, I mean that's pretty much it. In that example, just go like, I don't know, borrow a friend's racket or something. Put on
Yeah.
your Nikes that your Converse that you already own, and just go hit for a little bit. I don't know.
A lot of these rules of, I mean, I want to say life are just applicable to the market. You can test drive a stock by simply following it for 3 weeks.
Yeah,
If you're thinking about it. And also, I would just say you could test drive the stock by seeing how interested you are in it.
yeah,
Like when Ryan, don't get Ryan started about Watsco at a dinner party. This guy will go all night. You
yeah.
won't
It'll
leave.
be it'll be your biggest mistake. So you remember Harris? He had the One Penny at a
Yeah.
Time podcast.
Yep.
So he had this had or has this rule of thumb that I always thought was pretty good. He told me once that when he's thinking about buying a stock, like if he stumbles upon a stock and is sure that he wants to buy it or thinks he wants to buy it, he'll sit on it for like a week or a couple weeks. He won't pull the trigger. He'll just wait like a week with that thought and just see how it kind of see how it settles over that period of time. And if he continues to want it after kind of sitting with those feelings, then he knows there's something there versus it just being an impulse buy, which I do think happens a lot. It's easy to do that with stocks because they're so liquid. And so that's an approach that I take as well. I will kind of sit on it. And in the case of Watsco, I've been watching this company for like 2 years now. I've had my eye on this one for a long time. And in that time, like kind of to your point earlier, I have gotten to know the company a bit better throughout that time. And I do think, interestingly, you do get to know a company much, much, much better after you own it. Um, but I also don't think that I also don't think that justifies like a 1% position or less. You know what I'm saying? So
Yeah, I don't think any impulse buying or impulse selling is healthy. When I was trimming down my portfolio, I've never had a thought and then immediately followed through with an action when it came to my portfolio. In life, for sure, I've done that, and I
mm,
sometimes encourage that depending on what exactly it is. But in investing, you always have to think, well, what's your true intention here? Is it get rich by Tuesday?
there you
Are
go.
you literally trying to get rich by Tuesday, and so you got to take this quick action? And even if you take the quick action, it's happened to me already more times than not, where like I have taken some time to think about it, and then I've sold out of a position or I bought the position, and then all of a sudden, like an hour later or like the next day, it was either at a better buying price or sell off
Yeah.
price,
Yeah.
But that impulse, like I'm like, can you even move slower on this, right?
Yeah.
So you got to be careful with the impulse decision making for sure.
Yeah, and I guess it just depends. It depends too, like what kind of investor you are and what kind of goal you have with that position. You know, if you're someone who's swing trading, or if you are someone who does try to capitalize on momentum in a stock, kind of like some of the ones that we've talked about today. Like I think Robinhood is one. I think Palantir, Nvidia now at this point. I think, Hims. I think Oscar Health. I think, oh gosh, goodness gracious. There's one that's APLD or something like that. That's kind of a hot one right now. That one was up like 80% just in the last week or something along those lines, something ridiculous. So I think if you're going for those types of stocks and you're trying to ride a wave of momentum, you do have to be a bit impulsive. And I think that's maybe where, if someone's disagreeing on us in what we're saying here, maybe that's the difference. Maybe they're just a different type of investor. But like speaking personally, as someone who buys companies with the intent to hold on to them for a long period of time, and who takes those decisions pretty seriously, you can't rush that. I don't want to say you have to be sure, because you're never completely sure, 'cause the future's unknowable, but you have to be committed. And that takes time.
Yeah, you're getting married to your
Yeah.
port. At least I'd like to think, and that mentality will take you very far. When you're trying, and honestly, today it's almost a bit scary because now I'm like in my head, I'm like, well, today no one really takes marriage as seriously as they used to, right? But
Which
I
it's
think we're
true.
doing ourselves a disservice in not doing that. Like marriage is the biggest investment you'll ever make. Put time into it. And then think about your portfolio like that. Are you
Yeah.
day trading? Like, what are you doing? Are you really investing? Are you day trading? And what really is your strategy? Because once you pick that stock and you deem yourself an investor, this ain't about selling out by next week because the market got a little rough.
Right, exactly. And it's kind of an interesting comparison between marriage and investing, because the thing about a marriage, at least in my experience so far, is if you're in the right kind of marriage, it just gets better over time. As the years go on, it just gets better and better and better. And I think the same is true about your portfolio for sure, but also the businesses that you invest in. Great businesses get better with time. Time is the friend of a great business. It's the enemy of a low quality business. And so I think if you are investing in great businesses, they'll do you better as time goes on. So I do think that there is a lot of symmetry, not symmetry, between those two.
Well, investors, you let us know if there's any symmetry.
Symmetry.
Yeah, down below in the comments when it comes to all this, because the reality is, Ryan and I are just two voices here, and if I've taken anything away from the Blossom Conference, is that, Ryan and I might be the ones in the mic in front of the camera right now, but we're really just two amongst the mix of
Yeah.
a wide variety of opinions. I also want to take a moment, though, to say, if you're not already subscribed here to this channel, The Deep End, take a moment to do that now and really join us. This is, I think, just a part of the revolution to be, and that is not just The Deep End, but this community growing. And the more we stick together, the more we band together, the greater the opportunity that we all have to have a voice and a say on Wall Street, on Main Street, and we do that together. So definitely join us on this journey. Hopefully, Ryan and I are actually able to, at some point soon, do like an in-person deep end meetup with some of you guys, and that's the most exciting thing I think I can think about right now.
Yeah. On that note, too, last thing before we sign off, if any of you guys are here in Las Vegas, can you drop a comment below? I'd love to start building like I don't want to call it a Rolodex, but kind of like a head count of people here in Las Vegas, because if there's enough interest, and maybe this is why I haven't done it already, because maybe there hasn't been enough interest in the past. But if we can get enough people together, enough investors together, I'd love to create some sort of in-person event here. I would love to do that. So let me know in the comments if you're here in Vegas.
Can we say just drop your city? Like,
Yeah.
wherever you're from, just let us know in the comments by commenting your city, because we can get maybe there's like 20 investors in like Miami or LA or San Diego or New York. And if that's the case, then Ryan and I will maybe do our own little road show, and
Yeah,
see if, hey, if there's 10 investors there and 20 there, we'll fly out to you. And I think that would be pretty cool. If
I
there's
do too.
investors in New York, I can go ahead and set up a whole deal with the NASDAQ to do a NASDAQ tour. And that might be a pretty epic event to meet up at the NASDAQ with the Deep End team here.
Yeah, great idea. Great idea. But guys, thank you so much for tuning in and hanging out with us. This was another really fun episode. You guys all keep up the great work, and we will see you in the next one.